Target due to report earnings. I'm joined by Jeroen Martis, Director of Consumer Research at Thomson Reuters. Jeroen, nice to see you. In terms of Target, you think these earnings could be very, very telling?
It's going to be very telling because there weren't too many favorite retailers during the holiday season, but Target was definitely one of them. It was so popular that the website crashed a couple of times during the holiday season because of the number of visitors to the site. They're doing really well with their omni-channel presence, meaning you buy online and then pick it up in store. Also, the shipping was free for most items, and they offered 15% off for Cyber Monday, which brought a lot of visitors. Not to mention the merchandise was really good. It had some partnerships with Star Wars, so they sold a lot of toys that really hit the mark for the holiday season. So Target, because it was such a favorite retailer during the holiday season, it's going to be very telling for us where the consumer really stands in the United States. Target is also it's also facing difficult comparisons from a year ago. Last year it posted a 3.8% same-store sales. So if it still posts a good same-store sales on top of last year, it will tell us that the consumer is still resilient. However, if the number comes in below 3%, it will suggest that the consumer might be struggling a little bit.
And what is Target doing right as opposed to a Walmart?
Well, the right merchandise. Walmart still has some troubles with its online. It's not as efficient as Target, even though Target, okay, it crashed, but the offering was better. It's easier to navigate. Analysts are really bullish on its online presence and how it's selling the merchandise. On top of that, it had the right number of promotions. So even though it offered promotions during the holiday season, it didn't break the bank. It's not hurting margins as much. It didn't give everything away.
And what does that mean for revenue growth, and what are the expectations there?
The expectations are actually pretty good, but because Target did so well last year, it is facing difficult comparison, but it's still expected to do healthy. And whatever the numbers are, it's going to really tell us exactly where the consumer stands right now.
And does this also mean that the consumer is looking at options to Amazon? Because that's also been the big worry for some of these companies.
Absolutely. In fact, one of the trends that we've seen in the holiday season is that more and more consumers are buying online. The amount of money consumers are spending online continues to grow progressively. And as a result, a lot of the brick and mortar stores have been suffering, especially this holiday season. January was very telling of that. We were hit by a big blizzard. Even Target struggled during the blizzard in January. But as we saw estimates progressing in the beginning of the quarter, meaning November and December, those were very strong for Target. So that's why, again, it reinforces that the numbers are going to be very telling, because it was a favorite retailer. It did really good in November and December, but as any other retailer, it struggled in the month of January because of the blizzard.
Jeroen Martis of Thomson Reuters, thanks so much.
Thank you for having me.
I'm Rhonda Schaffler for The Street.